Good morning, traders. Very happy May 16th. Take a look on Fibonacci levels and take a look on the importance of playing by the rules. We're dealing with historical highs. In front of you instantly, this trade is struggling to break through reversal zone. By the time you overcome to reversal zone, your target is respected and you stop outside of break-even. You never ever buy into reversal zone. If I remove the numbers from this chart, if I remove the title from this chart, you will see it doesn't matter what you are looking at, because the exact same identical formula and the exact same reversal zone present on any instrument, any time frame. This is exact same thing that's been in a play on S&P hourly last week. This is exact same thing I warned you yesterday morning. Cannot enter long. Levels projected on your day trading chart more than a week in advance. This is your range this morning. As I said to you when market retraced, this would be crucial Fibonacci support. And this is what you use for your day trading entries, this hourly chart. However, we are dealing with historical highs. We are not having flawless points of entry we witnessed on May 11th. We are dealing with painful, overextended rally, quite a range this morning. Only Fibonacci will give you this much accuracy. Reversal zone is reached. Never ignore that level. Never disrespect what price is telling you. Doesn't matter if you invest on gold long term. As recently gold reminded you, chart present in front of you for years, price struggling, and reversed from reversal zone. Hedge fund trader who is in the course, been investing on gold from this crucial Fibonacci support since last December. No surprise where price had struggled first and found very crucial reminder. This is the end of the minor trend. Bearish trend on gold is minor, as buyers stepped in with vengeance until here. Identical formula, very different strategy. Fibonacci levels remain the same. Strategies I teach in the course vary. This is long-term strategies that I will be teaching on Friday. This is day trading, exact same level, where S&P struggling on junky little chart, just like gold had done. And this is what you will witness tomorrow morning once again on oil. This is the levels projected in front of you, weeks in advance, in a play right now. If you remember where bullish rally played out on oil, and as you witness on YouTube channel and my blog, I said oil will struggle at this Fibonacci resistance, and that's exactly why it's so hot pink that you would never disrespect this level. Extremely bullish news last week, but the crawl went on. Bullish rally had taken a massive pause next at this level. This is a major obstacle on oil. Identical obstacle as you're witnessing instantly on S&P. Market in pain. If you ever found strategies that works, it should work on any instrument and any time frame, as price action remains the same everywhere. And as graduates of the course share and will share in the bootcamp on June 12th through 23rd, it would be such a beautiful thing if oil will crash and burn to reversal zone, where bullish rally stepped in from, and struggling to break through the end of the minor trend for many months. That's a major obstacle on oil long term. What you trade, absolutely up to you. I worked with Fibonacci full-time since 2008. I worked with traders from beginner to hedge fund trader. Traders who trade anything and everything they choose. I warned you we're dealing with nasty range this morning. I warned you, it's a counter-trend move. Market in pain. You don't have to wait for days, weeks and months to see the accuracy of the method. I prove it to you each and every day, instantly on S&P. Every single thing in life depends on quality. Using anything else is afterthought, as everything else is delayed and artificial tools. Never forget that. So this is our range this morning on this day trading chart. This is crucial Fibonacci support, hour 2, market in massive correction. This is exact same correction you witnessed on S&P monthly chart. Chart present in front of you last 6 years. Remember this? Correction of 2015, 2014, crucial Fibonacci support, famous 1800 number. This is identical structure, identical strategy in front of you on hourly. This is what we are dealing with. If you are denying that this is crucial Fibonacci resistance and this is crucial Fibonacci support, success is not possible. Boom. How did we know to expect market to reverse? Price action and Fibonacci said so. Instantly this morning. No need to wait for hours, days, weeks and months. Identical formula. And that's all that matters. Fibonacci for exits, price action for entry. We are currently dealing with 600 points bullish rally. Market giving you the most challenging conditions on record. VIX at historical low. VIX had never been lower. Do you know that? Take a look at the VIX. Ouch. This is day trading nightmares. This is broker's heaven. VIX at historical lows. And VIX is heading lower. Which means day trading conditions will become more challenging. If you ignore overextended bullish rallies, if you ignore the danger of these conditions, success is not possible. Market dances in correction 70 to 80% of the time. And as long as market heading higher, these challenging day trading conditions will remain. If you can trade these market conditions, you can trade anything. Day trading requires spectacular volatility. Unless we're gonna have missiles flying, VIX is heading lower. Market is heading higher. Institutions staying on sidelines. Bullish rally 600 points later. Market rallying higher. As I said to you since the start of 2016. You want to trade with institutions, you're adding to your positions. Every single time you see flawless bullish rallies. The only good thing for day trader is to be on the right side of the market. Every single pullback on hourly is a gift. Right now, hourly chart looks identical to weekly. We're dealing with overextended day trading chart. We need for the market to crash and burn through this support. Levels identified more than a week in advance. If you browse the blog, going back to January 2016, you will see extremely clearly every single morning 9, 10, 15, 25 points. We are the trend inception. What you trade, absolutely up to you. This is day trading chart. We need this support to be out. We need the market to crash and burn. You don't have to wait for days, you don't have to wait for weeks, you don't have to wait for months to see the accuracy of the method that applies to any instrument, any time frame. If you are in trading, I certainly hope and pray you are a very intelligent human being. I hope and pray you're extremely well read. I hope and pray you know extremely well what has happened in the hedge fund world with Valiant. I was extremely outspoken against top hedge fund in US, publishing articles saying it's the worst idea ever to buy Valiant into reversal zone. I said my only bias on Valiant is bearish. The only good thing to do on Valiant is short and short and short every single pullback. Top hedge funds in US are buying. Ouch. Students in the course know. Price comes to reversal zone, market will crash and burn 80-85% of the time. Valiant crashed and burned through 187. Will S&P do the same? Identical strategy as on Valiant. Remember Euro at reversal zone? Identical strategy as on S&P hourly. Remember 3800? Remember what Euro had to do to break through this support? Remember what I said about Euro since 2015. This is crucial Fibonacci support. This support is out, Euro will go into free fall. Euro is still stuck at this support. We're not getting Euro exit. We've gotten one on pound. This support had been broken. Pound already reached 119. S&P stock, what a pickle. What a challenging day trading conditions we're dealing with. Because institutions not shorting the markets, institutions not closing the positions. If you can trade this market, you can trade anything. But pulling a trigger randomly because price came to reversal zone, never an option. Prior, Apple collapsed and went into free fall, despite flawless earnings, and reminded you, horrific earnings do not mean a thing if this crucial Fibonacci support respected. No need to short Apple now. Apple put you through massive correction for about 8 weeks. Knowing the rules for your point of entry is the key. This is holding the key to this market. Lower the market goes, better your bullish point of entry will be. Quite a pickle we're dealing with. This is broker's heaven. This is when broker prints money. If you do not understand how dangerous this market had been, if you do not respect corrections, as knowledgeable trader buys as low as possible. If you are stuck this high, you better know the danger of this support and keep your fingers crossed that it will finally be broken. Hour number 2. After dancing for 2 hours at this crucial support, dancing in 4-point range, this support is out. Keep your fingers crossed, price will be here tomorrow morning at the time of oil news release during trading room hours. If not, just a reminder that holding in day trading does not work. You know the rules and you understand. Day trading support correlates with institutional support. You do not leave the screen. If this plays out this afternoon, even better. So, we're in worthless bullish correction currently, 2-point range, extremely weak, extremely counter trend. Every single trade different stop, different target. Every single trade based on key Fibonacci levels and key Fibonacci rules. Fibonacci Trading Bootcamp on June 12th through 23rd, we're down to 12 spaces. Website will be updated by the end of this week. For new students, bootcamp including in the course news graduates of the course paying additional fees to take the bootcamp. Some of the graduates had done 4, 5, 6, 8, 10 boot camps. This is a bootcamp number 11. Only a couple of bootcamps per year. Bootcamp part of the course 8 weeks. Trading room always closed during bootcamp. Sooner you sign up, more prepared for the bootcamp you will be. Everything you learn in the course applies to any instrument, any time frame. Highly encourage you to please listen to the students on the website, as students constantly share what they trade and how. Students from beginner to hedge fund trader who trade S&P, oil, stocks, forex, anything and everything that has price. Options. After you review the information, feel free to contact me 925-257-4298 or please send me an email to info@fiboinstitute.com. So I hope you learned and witnessed this morning the importance of reversal zone, the importance of playing by the rules. Right now S&P stock crucial, Fibonacci support and Fibonacci resistance. And that's all that matters and all we concentrate during bootcamp.